Hey traders, welcome to the Strategy Lab video. My name is Alexander Nikitin. I am a professional trader and a developer of MPS software. If you guys are new, what I do in these videos, I am explaining you the ways of trading advanced patterns and harmonic patterns. In my previous videos, if you watch them on my YouTube channel, I was talking mostly about advanced patterns. But in today's video, I wanna walk you through the identification, trade execution, and trade management of a harmonic patterns. And I will do it a very specific way. I will demonstrate you one of the trades that I took recently and that I posted to my private chat room on TradingView. You can see I have 95 members here in my private chat room. They all witnessed me placing the trade. They all witnessed me sending them my targets, my entries, my stop losses exactly beforehand, before they actually happen. And some of them also profited from my ideas that I posted to this chat. So in this chat I post the trades that I really take actually in my trading, how I do my trading routine, and what I take I post here. And sometimes it coincides with what I post to public. I have some public ideas as well, and you know, if you are a follower of mine on TradingView, I'm posting some charts. And sometimes the charts that I post, sometimes that they may never complete, or they become invalidated, and of course I never trade them. They never lead to opening a position. It is an idea, it was good, it meets all criteria, but it never happened. Price never reached that level where I wanted to sell or where I wanted to buy, or it was broken the level and I instead of selling I turned into buying, and so on and so forth. So it is what you see on the public charts that I post may not reflect the reality of how it is. So in today's video I will show you the exact method of my identification, trade execution, and trade management. And it is exactly almost word to word exactly the same as it is described on my website www.ps-software.net. Click this Learn the Patterns tab, choose this pattern, for example a Gartley. We'll talk about that Gartley because my recent trade that I took and that I posted here is a Gartley. And then just invest your time to learn this, invest your efforts to memorize all this identification, trade execution, and trade management. What I will explain here is simply explaining you these steps. Okay, words say little, but picture says much more. So let me picture what I'm thinking of. Here's the pattern, yes, and if you read what is written on the website, step number 1 begins with this. The Gartley harmonic pattern starts with an impulse leg or an anchor leg. Okay guys, let me explain to you what is an impulse leg or an anchor leg. I will do it this way. For example, this is a market movement. An impulse leg is something that breaks this support. Okay. And what is an anchor leg? An anchor leg is something that does not break this, but is pretty close to that. Something like this. This is an anchor leg, a retest of something. Well, that's it. Only two situations when you have a retest or this. So the Gartley pattern look this way. After you have your initial impulse or anchor leg, you install your X to A points. Okay, let us install them, let us label them. This will be point X, yes, and this will be A. This high is A. Swing low to swing high, A. Okay, after that, read further. Criteria number 1. The market forms the big completion point by fulfilling precise 6-1A retracement of X to A. Okay, now I will teach you how you do this. You take your Fibonacci retracement. You enable magnet mode. Fibonacci should magnet to price. Here, yes. Then you go to settings, and you enable 50, 61A and 786. These are the levels that you need for identification purposes. Okay, what you look at, you are looking at the first retracement back. This retracement retraces X to A was an upside, so this should be a movement to the downside, first retracement, and this movement should be precise 61A. But if you will look at this price action, you will notice that it does not touch 61A. You see? Can you qualify this as precise 61A? Yes. So read further. Note, AB move remains valid even if price does not hit 61A of the XA and stays between 50 and 61A. In this case, make sure that price is closer to 61A rather than to 50. That's it. Okay, so how do you understand that price is closer to 61A? Take this price range. Okay, click on this low, yes, and stretch it to 61A. How many pips we have? 2.3, yes. And now click on this low again and stretch it to 50. How many pips we have? 3.2. Obviously, we are closer to 61A. That's why this pattern is qualified as a valid Gartley B point, valid potential Gartley. So we take this and mark as a B point. We have qualification of a B point. Even if it is 1 pip closer to 61A, it would be Gartley. If it is 1 pip less than 61A, 1 pip closer to 50, then it would be a BAT. Okay, once we have our A to B installed, we then take our Fibonacci again and stretch it from A to B and go to criteria number 2. If criteria 1 has been met, then look to criteria number 2. The market forms the C point completion by fulfilling at least 382. And note that the B to C movement remains valid if it hits the 382, but it does not touch A. Okay, let's enable the 382 here in your thing, and let's enable A. The A is the retest of this high. So market touch the 382, goes further, but it does not touch A. Does this make the B to C move valid? Yes. Okay, so it is valid. Let me change it to C. And let's go to criteria number 3. If criteria 1 and 2 have been met, look for criteria number 3. A potential reversal zone is calculated as a confluence of 786 of XA, AB equals CD, and corresponding B to C inversion. Let's go one by one. We should first calculate the 786 of XA. So we take our fibs once again, stretch them from X to A, and enable 786. Disable everything, enable 786. Okay, good. Then we should have an AB equals CD measurement. Okay, how can we measure the AB equals CD? There are two ways. One of them is to take this trend line, yes, and then you simply copy and paste it here to C point, start from C point, and you will see that the completion of this trend line is somewhere here, yes. Another way, and is much better way to calculate AB equals CD patterns, is this. Go to trend-based fib extension, click on A, click on B, and click on C. Then go to settings and enable 1. This way you will have AB equals CD, the same price, it is picking to the same price. And then you need a confluence of B to C inversion. What is the confluence? The B to C inversion depends on the BC leg. So it should be 161A inversion if the BC is 382 to 44.1. It is 161A again if it is 44 to 55. Yes, it is 161A if it is 55 to 66. It is 1414 if it is 66 to other, and so on and so forth. So it all depends on your B2C leg. If your B2C leg is deep, then it should be this. What is written? Okay, our B2C leg obviously is almost hitting the A point. Yes, it is more than 886, so it qualified to this. If B2C, if the C point stays within 83.6 to 100 of AB, then we should use 127 BC inversion. Okay, we should use 127 B2C inversion. How do we draw inversions? We take this trend-based tool. Yes, again, we click to C, we click to B, and we click to C back. And then we need to enable 127 B2C. 127 B2C. So now you see this? So we have 3 lines, 1, 2, and 3. And all these 3 lines consist a potential reversal zone. Okay, look further. Variations. You should keep the variations in mind. To get a better confluence of levels, I optimized them. This one should be if this is this, yes. This should be if this is this, and it should be 113 if it is from here to here, to have a better confluence. So it should be 113 to have a better confluence with AB equals CD pattern. So instead of 127, that is pretty conventional, let's go to click 113. So you see 113 has a better confluence with 1 to 1. Okay, so now the potential reversal zone looks this way. So the MPS monster pattern search, the software that I have created, will draw the patterns this way according to optimized ratios. Okay, there is also some way to optimize them. In his books, Scott Carney says that sometimes he uses in Godless 113 AB equals CD. So he goes here to alternative ABCD pattern and enables 113, and he goes here to B2C inversion, and of course this way we should enable 127. Okay, now you have your potential reversal zone being slightly more tight. It is slightly closer to 786. Right, it doesn't make very much difference here in this situation, but the fact is that you should look at the confluence of these 3 lines: ABCD pattern, 786 retracement, and corresponding B2C inversion. So the B2C inversion depends on your B2C leg, the C point. If it is deep, then you should use this. If it is not, then you should this. And then look further. The market forms the D completion point. The pattern is not completed until you have a terminal price bar. It is the first bar that crosses the last level of the potential reversal zone. So is this a terminal price bar? You see? No, it does not touch 786. Then we have kind of retracement. And what is the terminal price bar? It is this. It is the bar that crosses the last line. The terminal price bar installs another support level. So now we have a confluence of 4 levels. This is the support level and 3 levels of support calculated by the pattern. So the 3 levels are called potential reversal zone. Yes, we are looking at some potential reversal here. And sometimes in case of type 2 reversal execution, we will need this zone between the potential reversal zone and the terminal price bar low. You see this? We will sometimes need this zone as well. Okay, in today's example we didn't have a type 2 reversal, but we also need this zone to execute. You should make it your habit to have this in mind, that you can have a second reaction here once price hits your 382 target, that comes back, and if you execute it from here you can go to the highs, skyrocket to the highs. Maybe with other guys' quotes this was a terminal price bar, maybe with other quotes then we have a 382 reaction, then we had a second completion, and then we had a skyrocket to the upside. Maybe with other brokers. But what I see from this chart, from FXCM quotes, it didn't hit from initial, and then we only had a terminal price bar much later. Okay, next thing that you do, you just take triangle tools, yes, and you connect the points X to A to B, and then you connect the B to C to D. The D point is the terminal price bar. Until then, you can only have a calculated B point. You expect this to be the 786 or whatever is the lowest point of the potential reversal zone, and then when it appears, the real D point becomes this. And that's why when you calculate your targets, initially you place it here on your D point, because you didn't have the price action yet. You place it on your completion point of the pattern, yes, and you enable the 3, 2, and 6 1A. But when you have real terminal price bar installed, of course you should adjust your targets here. Okay, now let us read the execution. After you have a terminal price bar, look at the reversal candlestick formation after the terminal price bar is installed. Execute your favorite entry technique. And there are some warning signs. The pattern requires additional confirmation sign if price gaps through potential reversal zone, or if you have an extreme expansion bar. I would rather say not that extreme expansion or gap through the potential reversal zone. Specifically in Forex, I would rather look at a trend bar closing through this potential reversal zone, especially through this terminal price bar, if we have a trend bar closing through this. And now we need to talk about the trend bars. Now you need the explanation of what it is. Actually, the trend bars are drawn by my indicator that I created for TradingView. You see the arrows to the downside? They show you the trend bars to the downside. Arrows to the upside indicate trend bars to the upside. This is very simple. So to execute the position, to execute your buy order, you need to wait until at least one trend bar, bull trend bar appears. To execute sell, you need to wait until one bear trend bar appears. And of course, it is also true to breakouts. If your potential support level, yes, the pattern is a means of calculating support and resistance, yes. If your potential support level is broken by the trend bar to the downside, like this, come on, if it is broken by the trend bar to the downside, you stop looking at reversals. You wait for retracement and trade it down. That's it. It is simple support resistance trading. You see, when it is broken, potential support turns into resistance, and the same vice versa. When the pattern is broken, potential resistance turns into support. And this is exactly what we had. Oh, let's go home. No, let's go this way. I will open it. This is exactly what happened with my last idea that I posted, and I had pretty many negative comments that were lately deleted by moderators because some guys were very disappointed with what I posted, and they simply watched the picture. Let me show it to you. They simply watched the picture, and the picture was telling to sell. Why it is telling to sell? Because we know that patterns are consolidating around 70% of time. Price is consolidating 70% of time, and it is trending only 30% of time. So odds are in the favor that if price meets a potential resistance, it will bounce. You have 70% of bouncing probability, and you still have 30% of breaking it. Well, if it is bouncing, then you trade it to the downside, and if it is breaking, then you trade it to the upside. Well, it maybe was my mistake to only put one arrow here. I should add additional arrows to the upside in case it works to the upside, yes. and that's why I had these kind of comments: only fools can trade these chart patterns and blah blah blah. But obviously the guys who write these comments have nothing to do with harmonic trading. They don't understand how these patterns are traded. The pattern is only showing this confluence of let us see it. So you see the two patterns here, the two levels, 97.25 and 97.24.3. so it is 1 pip reversal zone. It is 1 pip resistance. Yes, 97.25, 97.24, and look what happened. So we installed a terminal price bar. Obviously this terminal price bar was a trend bar, so we had a trend bar close through our resistance. What we better do? We did not open any sells here. We just wait for a buying opportunity. So we didn't have any buying opportunity here. We first went to the upside, then we retest this, and look at this, how exact was this support resistance level. It initially was intended as resistance, but when it was broken it turns into support. After this we bounced to the upside very well. So, and I updated my ideas. So you simply read it. The order is cancelled, no reversal happened, no trades opened, price broke the resistance that I marked. Broken resistance should turn into support, look for buying. And I drew this picture in advance. You should think that I drew it in advance, and I predicted that it will come to retest and bounce to the upside. And next it did exactly the same. It came to retest and bounced to the upside. That's why it was updated as target reached. So those guys who type these comments simply don't understand this, and you well these guys are looking very funny. They don't know what they are talking about. Okay, so now we come to execution. We should execute the trade to the upside. First of all, before you do that, we need to choose an optimal time frame for execution, because we will be waiting for a candle to close. If we wait this candle to close on 30-minute time frame, yes, we may miss some substantial part of the movement. Yes, that's why we need to switch to a lower time frame. And how do I know when we need to switch to lower time frame and to stay on this time frame? I simply measure it, how many bars the total pattern have. So if I measure it from X to D, yes, I know that it is 36 bars. So my rule of picking the time frame says that the pattern should be somewhere within 50 to 100 bars. Now let's switch to 15-minute and let us see if the pattern now is 50 to 100. So what we have right now from X point to the D point, it is 72 bars. So the optimal execution time frame is this 15-minute time frame. Okay, and now let's talk about the trend bar. What is exactly the trend bar? A trend bar is a bar that has a body at least 50% or more than its total range of a candle. So if you don't know this, what is the total range? Let me explain it. This is a rectangle. This is the body of a candle. This is an up wick. Yes, this is a down wick. Let me make the body smaller. Okay, so what is the total range? Those of you who don't know the basics, I will explain it. Total range is the distance between the high and the low. So this is the distance of total range. What is the body? It is the distance between open and close. So this distance should be at least 50% of this distance. You see this? If the candle is red, yes, so it means that price was trending from open to close this way, from open to close. It was trending. That's why it is called a bear trend bar, and it is marked by bear arrow, red arrow. If it is green, this means that price trended from open to close to the upside, and that's why we have a arrow, green arrow mark. You see this? That's why we have it. Now you understand the concept of a bear trend bar and a bull trend bar. If we don't have a trend bar, any other bars are called dodges. Dodges or range bars. Dodges or range bars. So to execute the trade, you simply need to wait until you have your first bull trend bar, because you are looking at the bounce, bull trend bar. Or if you are looking at the breakdown, breakthrough, you are waiting for a bear trend bar to close below the terminal price bar, yes? Bear trend bar to close it through, to break it. If you have a bull trend bar, you buy. If you have a bear trend bar closing through this, you sell. Very simple. Okay, in this case, we had a bull trend bar. So what we should do next? After we have a bull trend bar, you measure this price range and you should calculate your 1 pip distance. With my rules, I do it this way. I place my pending order 1 pip above, buy pending order, 1 pip above my bull trend bar, 1 pip above. And if it exceeds my high of the bull trend bar at least 1 pip, I am in. You see? And I place my stop loss 1 ATR below the terminal price bar. So what is said about targets 382 and 618? Yes, so we already drawn these targets on the chart. What is said about stop loss? Stop goes past X, 113, 1 ATR or 10 pips, whatever you choose. I choose 1 ATR below the terminal price bar, and it, in majority of cases, it goes past X. Okay, so let's enable the indicator that is called an ATR. Go to build scene, go to average true range. Okay, this is the ATR indicator. I have 2 of them. And let us see what was the ATR below this candle. It was 0.8 and 6. So you take the range, 8.6 pips, 8.6. This was the ATR. Place it below the low. Where should your target go? It should go to 618. Let me draw it. Long position. We execute 1 pip higher. That's why we draw it here, like this. Then let's go here. Let us stretch it this way. So this is the stop loss, 1 ATR below, yes? This is the target, to 618, yes? Okay. In this case, we have a inverted risk reward, 0.71. It is not the best one, yes? Of course. But I will show you something that we had in this chart trading room that was a type 2 reversal. I traded this pattern as a type 2 reversal. That's why it was much more larger distance for target than we have taken here. Okay, let us go. Let us do the management after we have this. First of all, the first thing to manage is to treat this distance between the 382 and 618 as an IPO, the initial profit objective. So let me type it, IPO zone. IPO. Initial profit objective is the distance between the 618 and 382. Initial profit objective. So initially you aim there, but if it goes higher, then, well, you may go it higher. Initial profit objective. So here's the rectangle. Okay, after you've been executed, you just wait for this to happen. Okay, after you also been executed here, read further. Order is triggered, place your D, target 1, target 2. Reversal should start from 3 to 7 candles after the terminal price bar. So it is exactly what happened. This was the terminal price bar. 1, 2, 3. We have a bull trend bar. Reversal started. If it didn't start, then the probability of having a loss increases in case you buy it. The probability of price to go lower increases if this didn't start within 7 bars. So you should have 3 to 7 bars. Then let's go here. You should draw your primary trend line to the newest point, or if you have candles, you connect the peaks or valleys. By the time this one was drawn, we already had one valley and the second valley, so we can draw our primary trend line connecting these valleys, connecting these lows. Okay, and here the management starts. You see this? When price breaks this trend line with a bear trend bar, yes, closes below with a bear trend bar through this trend line, you close it immediately. For example, you have this here. If it would happen here, you close it at least half of your total risk. Your total risk was 19, and if the price closed here, it would be maybe 9 or 8 pips. So this is the management part. You wait for price to close here. If it didn't close and bounce to the upside, you draw your acceleration trend line, and it is written on my website. When acceleration occurs, it is recommended to draw an acceleration trend line, and you should adjust this to price action. So after we had a bounce of a primary trend line, we have an acceleration trend line. So how can we draw the acceleration trend line? We simply draw it this way, like this. So the acceleration, this is very important, the acceleration trend line should only be drawn after the IPO is hit, after this zone is hit. If it was not hit yet, yes, for example, we didn't hit the IPO and price goes back to primary trend line and breaks it, you should close your position with the loss. So you could have an acceleration here, yes, but it may never hit your IPO. That's why you shouldn't exit on an accelerated trend line. You should exit at the primary trend line. But after the IPO is hit, you only exit at this primary trend line break. So the two situations may happen. Price goes straight to your take profit, or it is closing somewhere here and you take whatever profit it gives you. To break the accelerated trend line, you should use the same rules. A bear trend bar closing below, bear trend bar. With my indicator, it is a trend bar having this arrow and close below this acceleration trend line. Okay, we didn't close below the acceleration trend line, and we went to the upside higher and higher and higher and higher, so you can see how large was the target. Okay, now guys, let me show you something that I promised to you, and I told you that I executed this trade as a type 2 reversal, and to demonstrate this I will open my MetaTrader and I will show you. My computer is a bit slow, so it will take some time for MetaTrader to open. When we have this recording video software running, it is taking lots of memory, and it's taking lots of processor power. Okay, so what do we see here? he's this Gartley pattern found absolutely automatically. So what I need to do is switch this on and off. Let me show it to you. You see, off, on. I can switch the shark on and off. It is drawn absolutely automatically in advance. Okay, just switch that off. What happened before this Gartley? This is very important. Before this Gartley, this is Euro-Yen, the same 30-minute time frame, yes? Before this Gartley, we had this shark pattern. It completed and price bounced. Price bounced and hit initial profit objective, the IPO. It hit 382, yes? And after that it came back. And this second completion of a pattern, of the shark pattern, second completion, was in this form of a Gartley. And instead of taking 382 over Gartley, I placed my targets at 50 of a larger shark, because it is the shark target is 50%. Shark target is 50%. We didn't hit that 50% from first attempt. Second completion, Gartley entry, and this second percent. That's why I closed my position much higher, and I posted this in my chart trading room, and all the members witnessed that. So the target was taken here, 50%. Okay, let me enable that 50. You see, the target was taken here. What we generated was much greater than the if you trade the pattern in isolation. Of course, you should pay attention to this pattern being a part of a larger pattern. You can set your targets according to the large pattern. But even if you set them to your small, yes, pattern, it is still good to have it this way. It is still good to have it this way. You can also see that the pattern itself also looks like the two completion pattern. Yes, we first had almost completed, then we bounced to the upside, and then we have a second completion, yes, and we went to the upside. This all second completion stuff is the indication that this time you should have an extended targets, and look at your higher time frame, or look at your, maybe you have a larger pattern coinciding with this to have a higher time frame targets. This is the way to extend targets. You let your targets run. And of course you can adjust your trend line, the accelerated trend line, to a new price action until it is broken. Yes, and it's not broken here when it was broken. So this is not a breakout, because these are the range bars. Only a trend bar is a breakout. So first trend bar below the accelerated trend line is your exit. So actually you should exit here if you allow this to run. In extended targets you do it, you allow this to run. Okay, but I just took targets in this case at 50% and I posted it here. Okay, now let's consider another situation. It was a Euro USD, and here we have it. I will do it in my MetaTrader. So MPS 5 drew this pattern after this. You see how winner after winner. We had winner after winner. We had Gartley winner, shark winner, deep crab winner. Then we had this bear bat. And you think it was a loss? No. Look what happened. First of all, let's find the execution time frame. We measure the total. It is 37. We go to 15. I switched it off. You just noticed, yes. And we measure it again. It is 72. It stays within 50 to 100. Okay, after that, let me zoom it in. We have the terminal price bar. It is the first bar. Yes, this is the terminal price bar, and after we have a terminal price bar, within 3 to 7 bars we should have a bear trend bar to execute our sells. We prepare to sells because we know that in 70% of cases we have a sell, and only in 30% of cases we have a buy, in this case of resistance. Yes, and we start calculating. First bar is not a bear trend bar, not a bear trend bar, and this one is a bull trend bar. So what we do when we have a bull trend bar, we just broke our resistance, a bull trend bar. In this case, we turn everything upside down, and instead of looking for sell, we start looking for buy. And how do we execute buy? We are looking at the first bull trend bar. So is this next a bull trend bar? No. Bull trend bar? No. Bull trend bar? No. Is this a bull trend bar? No. Is this a bull trend bar? Yes. You have an arrow to the downside. So you execute it one pip higher than its high. You place your stop loss 1 ATR below the low, somewhere here. I don't know what is the 1 ATR below this. It should be 8.1. 1 ATR is drawn by my MPS, 8.1. So let 90. So let this be 7000, and let this be 1699. It will be 1 pip. Sorry, I'm looking at 8 pips. Yes, let this be 7081. If it is 000, this will be 081, 8.1 pips. So now it is this. You just measure your 1 ATR below your what is this? Below your low. This is a trend bar. You execute from here, 1 pip above. I just approximate that. You measure it, 18 pips risk. You should aim at a retest. 16 pips of reward. Well, pretty good risk to reward, especially when you manage this. Yes, and what you do, you hit your take profit. You hit your take profit. It went to the targets and it never went to your stop losses. Especially when you had this stuff. You had this bull trend bar, bull trend bar, bull trend bar. Do you draw the trend line? No, of course not. It's not a primary trend line. It is acceleration. You shouldn't draw it this way. You can draw your bull trend line here when you have a true higher low, and then you can draw your accelerated trend line here, and you can exit at this trend line break. So this was the first bear trend bar breaking your trend line. So you could extend your targets all the way upside and have 32 instead of 16. That was initial. Yes. Okay, these are all ways of trading it. You either trade it as a bounce. If no bounce happened, you trade it as continuation. Exactly what happened with my idea, and I had those negative comments about this idea because simply guys don't know how to trade it. We expected to sell, but instead of sell, we didn't have a bear trend bar. Was this a bear trend bar? No. Was this a bull trend bar? Yes. We had a bull trend bar through the potential reversal zone. This indicates a continuation. Indicated a continuation. Okay, so guys, I'm talking a lot about this chat that I created. This chat is free, and I add guys, those who ask me to add, for example, this one. I added you. Joining group, interested joining group. Not all of them speak English good. Okay, I just add my followers or add anybody who is interested and who messages me to join this chat. And in this chat I post my trades, and I did the calculation of what I have posted, of my trades that I have taken, using this methodology, harmonic trading. Using this methodology, you should not mix up with advanced pattern trading that I was explaining previously in my previous videos. So in this chat, I'm using this harmonic methodology. I'm using this bull trend bar, bear trend bar concept. I'm using this trend line, primary trend line and accelerated trend line concept as well. I'm using this type 1, type 2 completions, and I'm using these patterns as a means of calculating support and resistance. So if it bounces, then we trade a bounce. If it breaks, then we trade a break. So we trade it both ways. It is only a means, and it looks kind of silly when I'm asked by other guys, what is the accuracy of a pattern? It all depends on how you trade it. Of course, it is the same as you ask, what is the accuracy of support resistance? What is the accuracy of support resistance? What is the accuracy of pivot point calculation? Well, who knows? How you trade it. It all depends how you trade it, where you place your stop loss. You may be stopped out pretty often and hit targets only 10% of time. Or if you trade it smart, you can hit targets much more often than you hit stop loss. So what I did, I just calculated the performance of the trades, all the trades that I posted here, and you guys know that I'm already running this chat for 3 weeks. So week number 3 we only had Friday and we only had 1 trade. Week number 2 we had full week, Monday, Tuesday, Wednesday, Thursday, Friday. All these trades are posted in the chat. You can find them if you scroll it back into history, and you can find the management, all the management, all the results were posted as well. So let us see. In this manner, Aussie New Zealand bear trend bar closed below the primary trend line bar, closed the order minus 13 pips. It was yesterday on Friday. Okay, so this is the result of week number 2. You can see this. This is the result of week number 3. You can see this trade to trade, and this is simply total result, and I calculated the statistical stuff. So totally we had 21 trades for the course of this 2 weeks and 1 day. We had 13 winners, 8 losses. Average win is 1.22 and average loss is 0.67 because I'm cutting my loss. And I explained you why I cut my loss when the primary trend line is broken to the downside. Yes. So the win percentage is 61%. Well, it is exactly the same as I had on my backtest, and I tell it in all my videos that these patterns are about 60 to 70% correct. So 61.9 is simply something that proves my words, something that proves my backtest results. Okay, I remind you that this is a real-time trading result that I posted here in this chat. So all these 95 guys that members of my chat, they witnessed it, and there were some guys that profited from these patterns, profited from my recommendations. Some of them were using it as signals to execute some patterns. Some of them are learning, some of them simply exploiting it to generate some money. Different guys with different goals in this chart. Okay, so what we generated overall? 236 pips, yes, and we generated 10 R. What is an R? 1 R is the initial risk. So if you risk 1%, if you risk 1% in each and every trade, it will be your 1% equals to your R. So if you generated 10 Rs, it means you generated 10% on your account during the course of this 2 weeks and 1 day. Okay, you generated 10%, or you generated 236. Just guys, let us do some simple math. If you are not a professional trader, if you are an ordinary man, middle class man, or whatever it is said, you wouldn't be open your position of 100 lots, yes, as professionals do. 100 lots is the average professional position size, and it is risking $1,000 per pip. Okay, I suppose you wouldn't do this. You would be trading something much less. Let's say you were trading one standard lot. So if you trade one standard lot, you lose or generate $10 per pip. Yes, so you generated $10 per pip, and let's multiply of total pips generated during the course of 2 weeks. So what you have generated is $2,369 if you traded all my ideas posted in this chat. And I remind you that this chat is free. Yes, so what it means, $2,300. You would already have a return on investment if you have bought the software. You see, because the price of this software is much less. It is $427 for automatic and manual, and it is $815 for professional. I'm using a professional variation, of course, so all these patterns are available for me, all these algorithms are available for me. So, and I use the patterns that I use are obvious patterns, so I'm exploiting the concept of obvious patterns. So what I do, I switch between these algorithms, and if many algorithms find the same pattern, I will be trading this pattern. Watch my previous videos on YouTube channel to have more ideas of how I exactly execute this. So the fact is that we already, in this chat, we already generated twice more than you might have potentially spent. And if you have this software, there is no need to sit in this chat and wait for me to open trades and send you a picture. Knowing this stuff, knowing how to trade the patterns using this trading courses, knowing how to trade these patterns, you can also use this video as a reference of how you can buy. You can watch it again and again until you remember the total methodology. You will generate similar results. It is inevitable. If you follow these steps, you generate similar results. I don't say that you will generate exactly the same results, because past performance does not guarantee future results. Yes, you may face a drawdown when you have a loss after loss after loss, and we had a drawdown here on week 2, I suppose. We had a loss after loss, and then we had another loss, or maybe week 3. Week 3 we had a larger loss. You see, we generated something, we generated 2.4241 R, and then we lost it all and went negative, and then we boom had this breakout, because we had a loss after loss after loss after loss, 4 losses in a row. But if you guys know that in a long run the strategy will recover all these losses and it will bring you profits, you see this losses. So we had 140 and we had a drawdown to 100, so we have lost 40 pips. You see, just imagine if you were trading it one standard lot, multiply 40 pips by 10, so we in this drawdown we have lost $400. Well, maybe some of you will say, you know what, the loss was pretty sensitive. It was pretty emotional to have this kind of loss, $400 lost. Or maybe you say, you know what, if I risk $10 per pip, this $400 loss is something that I prepared for. If you are not prepared to have a 400 loss, maybe you should risk less. Okay, and then it was recovered. Well, obviously it's worth paying attention to. Do the backtest of this strategy, of this methodology. Try to paper trade this. By the way, the MPS is the best for backtesting. It is something that is amazing. So you switch it and you go and you execute these trades according to the methodology. Yes, what you need to do, you need to scroll back and see if the pattern works or not. For example, this one, we have this setup. Okay, we calculate the pips, 34. It means we should switch to 15 minutes. That's why we will switch that off. Go to 15 minutes. So what we have here, we have a bear trend bar closing through our potential reversal zone. This bear trend bar followed by this bear trend bar. Wait for retracement, yes, and sell it. This is it. Or next stuff. We had this completion to the downside, completed the pattern, and we had the initial bounce, and then we had the second completion. We didn't have a bear trend bar closing through, or we did have it. Yes, we didn't have. Maybe this one is not the best example. Maybe this would be turned a loss. Then you go further. It doesn't only show you winners, it also it shows you everything. So look at this. We have a bear trend bar closing below, so potentially you could sell it and you could profit from this movement to the downside. Yes. Then what other patterns we had? Same stuff here. Potentially you could buy it after a bull trend bar closing above your reversal zone. You could buy it and have a profit using it. So simply backtest and you will see if the methodology is accurate or not. Okay, now that's it. Hope you like this video. If so, give me your thumbs up, share this video on social media, comment below if you still have some questions on how the patterns are executed and how they are managed. I tried to do this as detailed as possible, and what I explained is exactly what is written on my website. It is the free trading course. If you learn it by heart, you will possess the same knowledge that I explained it to you today. Okay, one more thing. Join my chat. Follow it for a week or two, and you will witness with your own eyes that in real-time trading we generate money here. In real-time trading, I posted in advance before I go into close a position, before I go into open a position. Just let's go somewhere. It is absolutely transparent. I cannot know if the pattern will be a winner or a loss. I cannot post only winners. How do I know the future? I can't know this. And as you see from this win percentage, 61%, I have also 38% of losses. So I can do nothing about this. 38% of losses is the thing that I should accept. This is my risk. This is what I pay for staying in this business. This is my investment. If I do not invest, I do not have this return. So I simply accept my losses. Okay, join this. Trade with me here. Maybe you will use some of them as signals. Maybe you will use this chat to learn more about the methodology that I use and do the backtest on your own. Maybe you will find a way to make it even much better. It's all about you. Maybe you will simply copy this methodology and apply it in your own trading. There are plenty of ways of trading these patterns. And you should always keep in mind that the pattern is simply a means of calculating support and resistance zones, and these support and resistance are extremely powerful. So how will you exploit that? It's only up to you. Okay, now that's it. As I told you guys, share this video on social media and give me your likes and subscribe to my next episodes. Until then, good luck and good trading. Hope to see you soon.